Welcome to Markets Now. I'm Michelle Rourke with Tomm Pfitzenmaier with Summit Commodity Brokerage. We've got green on the board and everything but the soybean complex this morning. And Tom, let's start talking about the grains. First of all, the wheat market, double-digit gains there. Is that war premium or weather premium at this point?
Yes. I think it's both, Lou. I mean, there
Both.
were reports of the Russians bombing some of the Ukrainian ports with drones, so that's involved. You've got this mess over in the Middle East. It could have some effect somehow, and then you've got dry weather conditions that for planting winter wheat that kind of has everybody a little nervous. So I think it's just a combination of things. And then technically, you keep nudging out those highs, which reinforces the positivity in the wheat market too. So I guess it's some of both, and when it comes right down to it.
Yeah, getting those winter wheat contracts in the nearby above the $6 mark certainly was positive, even from a psychological standpoint. All right, so you talk about war premium. Crude oil's putting in war premium. So is that what's lifting the corn market, or is it following wheat?
Well, I think, well, corn often takes its lead from the wheat market, so you got to figure that that's part of it too. But I think that $2.5 rally in crude oil this morning, in addition to what it rallied yesterday, is pretty important. I mean, when 40% of your demand for corn goes into as an energy component, you got to figure that that's part of what's being factored in here too.
Technically, though, the soybean market has made some new highs for the move here. How much more upside do you think we have in the corn market? And the funds have been covering their shorts. Are they going to continue to do that? How much more do they have to cover?
Well, they've got a fair amount to cover yet. I guess the question in my mind is whether a lot of that short covering was end of the month, end of the quarter repositioning that went on, or whether that's going to continue on into the month of October. Now, if you look back fundamentally, there's roughly five years where we had a rally in both corn and soybeans that started in that August-September period and then tended to top out roughly around the time of the October WASDE report. Now, if you look back at all those comparable years, we've exceeded the rally that those years had by a fair margin in both corn and beans, which tells me that if those patterns hold, we're kind of getting up into levels where if you haven't made sales to take advantage of a $1.14 rally in beans, for example, you probably should be moving a few beans at least to take advantage of this. And 40-50 cent rally in corn, same thing. Now maybe it's I'm not saying the high's in and it can't go a little higher, but I think you're starting to stretch things a little bit. Momentum indicators have rolled over in both soybeans and meal this morning. So there's another little sign that maybe there's a crack in the market here. There are also some rain in the forecast for Brazil and their drier areas, and that's been a big supportive factor in the soybean market. So you got to be a little uneasy if it starts to rain down there and they can start planting what could be a record crop down there. I don't know. And with the U.S. at a 535 million bushel carryout, I don't see how you maintain your enthusiasm for long positions in the soybean market for too long here.
Yeah, plus I'm sure we're getting a little bit of harvest pressure there in the soybean market at the same time. But do you think the funds are flat in that soybean market, or have they gotten out of most of their short position
Yeah,
already?
they've gotten out of a substantial portion of it, the majority of it, really. I think they're still short a few contracts, but not by much. And they've trimmed their corn position too, but not nearly as much as they have their soybean position. That I think a lot of fund managers are a little spooked by that dry conditions in Brazil that really trigger a lot of this. Um, I don't know. That's kind of a little dangerous to do that. And then it's a little hard, but I'm guessing there's some repositioning with some equity money going back into the commodity markets as people that trade the two of them kind of adjust their portfolios for that too.
Gotcha. And you mentioned the meal market. It had such a big run up, and the funds are really long in that market. Do you think that market is mature now, or is there something going on with either Argentina or Brazilian weather that is causing the meal market to roll over?
Yeah, so I guess I'm not exactly sure what behind that $19.50 rally we had in meal a couple of days ago, but we've unwound almost all that. So you go up, make new highs, and start trimming all that off again, and it doesn't look all that great on the charts, especially when there wasn't all that much fundamental change to justify it. Now, if you do start to get to some rains in Brazil, that even makes it less I don't know, less desirable, I guess you'd say, to want to be long soybean meal. So I don't know. I don't like meal or oil. Uh, I mean, meal or soybeans. Bean oil may be supported by this continuing strength in the crude oil market. It's higher today when meal and soybeans are lower. So that's kind of got its own fundamentals too.
Yeah, and you could be getting some meal oil spread unwinding. It's hard to tell on any given day. Cattle market making more, at least in the live cattle futures, we're making some more new highs for the move here, Tom. How much more upside do you think we have in that market? Because it does feel like with cash trade higher, maybe the funds have gotten confidence to push that market.
Well, the contract as we speak is trading here right around 185 and a half. I think it could run up to 188, 189 on this run. Now, numbers continue to be supportive. There's certainly no expansion going on in the cattle industry. Weights are a problem, and everybody always talks about weights, and we're record high weights, but that doesn't seem to have affect the market all that much. You always worry about consumer demand, and every other article you read in the financial papers is about how awful things are for the consumer, and yet they continue to buy beef. So I don't know. I think there's some more upside in the beef. But again, you get up in that 188, 189 area on the December contract, and I'd lose my enthusiasm for that pretty quick too.
No doubt. Let's also talk about the hog market because we've had a really good run there. We're close to the September highs. Can that market keep going? And how surprised were you about the fact that we did not seem to react to this port strike?
Yeah, the fact that we didn't react to it to me is a little bit bearish. That should have been a supportive factor, and it wasn't all that much. That seasonally you tend to work lower in hogs into the end of October. Some of my technical stuff has rolled over on hogs now. Again, like you said, we've got a little up to day today. I don't really expect that to go very far. If it does, I'd certainly use it as a selling opportunity because seasonally you're really fighting a trend there.
Yeah, no doubt. But the funds have really pushed that thing beyond the logics of the fundamentals, don't you think?
Well, the funds tend to do that in a lot of markets. So yeah,
True.
that's yeah, absolutely.
All right. Thanks so much, Tomm Pfitzenmaier with Summit Commodity Brokerage. That is Markets Now.